What's going on, everyone? It is April 2026, and the real estate market right now is like the 91 freeway at 5 p.m. Busy, a little unpredictable, and everyone thinks they know a shortcut that doesn't really exist. But I've got the data, and I'm going to break it down for you without any fluff or fear-mongering. We're looking at just the stuff that matters if you're buying or selling or just trying to figure out what the heck's going on out here in the Inland Empire. And real quick, if this is your first time here, hit subscribe. Every month, I take the national numbers and translate them into what it means for people living and doing business right here in the IE. So let's get into it. First, let's talk rates. Because this is what everybody wants to know about. A year ago, January 2025 to be exact, the 30-year fixed was sitting at 7%. And that was rough. If you're shopping for a $500,000 home, your principal and interest payment was $34.14 a month. $3,414 a month. Can you believe it? Fast forward to early April 2026, and rates dropped to 6.45%. Same $500,000 loan, your payment's now $3,144 a month. That's a $270 a month back in your pocket. $3,240 a year. That's a vacation, or 2 car payments, or like 40 trips to Market Broiler. And here's the thing, rates have been bouncing around lately, and we dipped down close to 6% in late February, and then they popped back up again. And that volatility is real, and it's not going away anytime soon. Investopedia puts it plainly, when global events inject uncertainty into financial markets, rate swings may continue. And right now, there's no shortage of global uncertainty. So what do you do with that? Well, you stop waiting for the perfect rate and start focusing on the right deal. Rates at 6.45% are still meaningfully better than 7.26%. And that sounds too high right now, but it's real money. Don't let your perfect scenario be the enemy of something good. Now, let's talk about affordability. And the good news, it's improving. Here's a stat that doesn't get really enough attention. Wages are growing faster than home prices right now. This chart shows median year-over-year wage growth holding steady around 4%, while home price appreciation is cooled to roughly 1%. And that gap, that's affordability, slowly repairing itself. Now, I'm not going to stand here, or really sit here, and tell you buying in the Inland Empire feels cheap. It doesn't. But the trend is moving in the right direction. And now if you've made it this far, do me a solid and hit that like button and subscribe. I put these out every month, so you almost always know what's happening in the Inland Empire market, not what some national headline is telling you. Now back to the market, where the sellers are waking up. New listings jumped 21.2% from February to March nationally, when 439,000 homes hit the market. That's bigger than the typical seasonal spring surge, which historically averages about 18%. And here in the West, which includes us, new listings were up 2.4% year over year. And that's good. More inventory means more choices for buyers. California was up about 15% month over month. But here's the interesting wrinkle. D-listings hit a record high of 112,788 in December 2025. And that's basically sellers who took their house off the market. They couldn't get their price right. So they pulled the house off the market rather than negotiating. And then guess what? About 45,000 of those homes came back on the market in January of 2026. The highest January relisting figure on record going back to 2016. Sellers who sat on the sidelines waiting for better conditions are starting to accept reality. Homes are coming back to the market, and that supply is exactly what buyers have been waiting for. And the proof is in the numbers. Buyers are showing up. Pending sales hit 432,560 in March, the highest March number in 3 years. That's great news. The market is moving. All right, now let's talk about prices. Prices ticked down slightly from $614,600 to $603,100 year over year. Now, before you start calling your attorney, that's not a crash. That's a correction. And in a market that ran as hot as Southern California did, A slight pullback, that's not a catastrophe. Keep in mind that those high prices were an anomaly. Prices going back to normal isn't indicative of a crash. It's just the market returning to normalcy. Here's what that means on the street. 62% of homes in 2025 sold below list price. And that's up from 38% in 2021 when the market was absolutely bananas. So if you're a seller right now, price it right. Overpriced homes are just sitting there. And that's just not my opinion, that's the data. Realtor.com weekly data through late March shows 22 consecutive weeks of flat or negative year-over-year price growth in asking prices. Price per square foot is also down about 2.5% year-over-year. That tells you this isn't just a smaller homes hitting the market. Underlying prices are genuinely softening. Your beat-down shack isn't going to sell for $1.5 million. You need to be realistic and listen to your realtor. For buyers, well, that's good news. For sellers, it means your neighbor's sale last year may not be your 2026 price. Adjust accordingly. And what's that mean for the IE? Well, we're not Florida. We're not Texas. We don't have the same inventory explosion. We have chronic undersupply and a whole lot of people who bought at 3% interest and aren't exactly sprinting to trade up. The lock-in effect is still real. Homeowners with sub 3% mortgages are not motivated to sell and pick up a 6.5% rate. Just doesn't make sense. And that keeps supply tight even as demand picks back up. Inventory is improving, but it's slow. And what's that mean for you practically? If you're a buyer, more inventory is coming. Affordability is improving. Rates, while volatile, are a full percentage point lower than a year ago. And so stop waiting for 5%. Get in when it makes sense for your life. If you're a seller, pricing is everything right now. The days of slapping a number on Zillow and watching the offers roll in, that was 2021. This is 2026. Price it to sell and you'll move it. Price it like it's still a frenzy and you'll be relisting in December. That's the 2026 breakdown. Rates are down from last year, sellers are coming back, prices are flat to slightly lower depending on your area, and the spring market is showing real signs of life. If you want to know what it's like specifically in Riverside, Fontana, Corona, or wherever you're looking, reach out. I'm out here every day doing this. I know this market, and we'll see you next time or somewhere around in the IE.